I lost almost $1 million in a single trade. Not because I didn't know how to trade, not because I picked the wrong coin, but because I got careless with risk. But this video isn't about the pain of that story. It's about how you can protect your capital so you never experience what I did. I'm gonna break down the exact framework, tools, and mindset you need to survive long term in this market. Because here's the truth about crypto. Making money is easier than keeping it. Let's get into it.
This is not financial advice. I am not a financial advisor. These are just my personal opinions on the market.
So why do most traders blow up their ports? A lot of people think these losses come from bad calls, poor coins, just terrible luck, but that's completely far from the truth. What a lot of these losses really come from is bad risk management. The usual oversized trades, lack of operational security, letting your emotions take control. You know, it sounds super generic, like the advice you'd hear from every other guru out there, but there's a reason this is something everybody can fall back on because it's completely true. This is a bit of a blanket statement, but with proper risk management, you'll be able to survive 5, 10, even 20 trades in a row without any problems. But once it's gone, it can take literally a single mistake to erase months, even years of progress. I mean, that's literally what happened to me. And that's the brutal truth of this market. Money is just as easy to lose as it is to make in this space. And going back on what happened to me, my public loss of getting drained for $1 million is the perfect example. Long story made short, I have another video explaining what really happened. I should have done more research. I should have been more paranoid. I shouldn't have had that much money in my PC to begin with. And by following any single one of those, I would not have lost even 1/10 of the amount I did. So something you can compare this very broad concept of risk management to is sort of like climbing a mountain. At the base, when you're playing with small size, you're just starting off in your trading journey, the falls don't really hurt that much. You're using these more as learning experiences. You slip up, okay, you get a scratch on your knee, you can stand up again. My point is that you're already at the bottom, but once you climb higher and higher, you start to have a lot more to lose. And when you're getting near that top, whether that's a 7 or 8 figure portfolio, you can't afford to take these big falls. One big misstep could wipe out years of progress. And risk management is that kind of safety rope that keeps you from free falling all the way down. And even when you're at the top, it still lets you take those falls as more of learning lessons rather than actual financial errors. But the biggest trap of all this is that people don't blow up because they don't know any better, right? Obviously, taking measures to protect your capital, it should be common sense. They blow up because they convince themselves that this time, for whatever scenario that they're in, is an exception, right? That whatever opportunity rose up in front of them gives them leeway to drop their guard. Some examples to this could be, for instance, if they're in a pretty hefty trade thinking, it's only risky if I lose, right? Or that they'll just ape really heavy and then pull out fast if things start to go south really quickly, or that they've lost on other previous trades and for some reason think, okay, this time it's going to play out differently just for the reason of losing in the past. And this kind of gambler's mindset is going to absolutely kill you. And it's how even the smartest traders, even people with years of experience, can end up back at zero with these tiny slip-ups and then ask themselves how this could even happen in the first place. What I'm saying here is that risk management isn't optional. It's not some boring side of trading that you think won't apply to you, and it's definitely not something you think about after something terrible happens, knock on wood. And it is the only reason you are going to be around to keep making money next year, next month, or even tomorrow. So before we talk about any rules or how you can actually protect your capital, like I said, risk management is a very broad concept, and you should be taking as many different approaches as you can towards risk management, because if you don't take this seriously, you will lose most of your portfolio. And it's something I can speak about through personal experience for multiple instances, and hearing that from me should scare you. The first $5,000 I made from 500, that took me months. I knocked that down to 500 in the span of a week. The first 6 figures I made, which happened within 2 weeks, where I only had, once again, $500 at the start, I knocked down to $20,000 in the span of less than 2 months. And even now, losing a full $1 million to a drain. All of these are my personal experiences. Hearing all of this should terrify you because discipline isn't the most fun part about trading, right? You hear it all the time. It's super generic advice, but at the end of the day, it's what keeps your $1 million win from turning into a $1 million loss. While talking about how you can protect your capital is important, execution is where most traders struggle. That's why I created the Fortune Inner Circle, an exclusive network where you'll trade alongside other 7 and 8 figure traders, gain direct access to our strategy and receive personal guidance from both myself and other top performers in the space. We have students like Bowen, a teenager who went from not knowing a single thing about meme coins to just recently hitting his first six-figure play and made over $100,000 just off one coin. And Co, one of the now top traders in the entire space, we've helped scale to a multi-million-dollar portfolio. We do maintain an application and interview process to ensure the mentorship experience of the group that we're trying to keep up. But if you're serious about accelerating your crypto journey, you can apply through the first link in the description down below. So the first course of action you can take is using the right tools and terminals. Because before I even get into the rules, frameworks, let me tell you straight up, a lot of these people blow up because they're using the completely wrong tools. And I see it all the time. People on the timeline hyping up some random bot they just found or DMing me like, yo bro, have you tried this new sniper out? If I look up trading bot on Twitter, I will see hundreds of different applications to trade crypto. Let me stop you right there. A lot of these tools are not only built by anonymous devs, they're untested, and the second you connect any kind of serious money, you are taking a bigger risk than any trade you will ever place. You are literally handing your keys over to someone you don't know. There is a reason I emphasize security every time I talk about Axiom Pro. Axiom isn't just another random trading bot, it's a YC-backed terminal. They're a real company, they're a real team, you can verify who they are, you can see the security audits, and compared to every other trading bot in the space at the moment, you know your capital isn't being piped through some sketchy backend, right? And it has every single feature that you need, whether that's wallet aggregation, scanners, contract checks, multi-wallet support, Twitter, wallet trackers. Not gonna go into too much detail right now because I have some Axiom specific videos on my channel. Definitely check those out. But if you want to get started on this, you can use the Axiom link in the description down below. Make sure it says Fortune on the bottom. That's my referral code. You will get a 10% discount off every single fee used on the platform. But bottom line, you can mess with whatever tools people are hyping up on the timeline. But if you actually care about protecting your capital, there is only one serious option, and that's Axiom Pro, and it's why I talk about it on my channel. There have been so many instances of people getting drained by all different kinds of applications, trading tools, Telegram bots that they see. So make sure you are using only the trading terminals with the utmost backing in this space. Now, Axiom is going to be for trading on Solana. If you want to trade on EVM chains or BNB, my personal suggestion for using a trading bot for BNB is GMGN. Just head to their Twitter page. You can just set it up with the pinned tweet right here. And for other EVM chains, I would just use BasedBot. BasedBot's the most secure at the moment, and they support pretty much every single layer you need to trade on, so you're not going to face any restrictions. So now, once you have the right tools, obviously the next step is going to be actually building out your risk management system, and it all starts with, drumroll please, segregating your capital. That's right, you want to discriminate against your money. You'd never keep it all in one place. So what are some of the essentials that you need? Let's go over them. Number one is your hot wallet. So this is your daily trading account. So this is the money that's in your Axiom account, in your Phantom wallet, and in a broader term, this is the money that's on the device of whatever device you're trading on, right? The wallet you use to take positions, trade plays, anything you need in the moment. You need to treat this money like cash in your pocket, right? It's enough to make trades, but never enough to hurt your quality of life if it just disappears overnight. You should never have any spare money outside of what you actually need to trade. And this is the number one core reason on how I lost a full $1 million to a drain. I had way too much money in way too many different unorganized hot wallets. Unless you are multi-walleting your trades, you should have 1 or 2 hot wallets max, with only the money you absolutely need now, nothing more. So whatever trades you're planning to take and whatever spare capital you need in the background for any new pairs that come up. So just a quick recap, these hot wallets are like cash in your pocket, money in your MetaMask wallet, money in your Axiom account. This is all for money you need on the spot. Now the next thing you're going to need is a cold wallet for spare capital. So this is where you park your medium-term holds and keep extra spare capital that you have that you do not need at the moment. Now if you don't know what a cold wallet is, it's a cryptocurrency wallet that keeps your private keys offline, disconnected from the internet, and locked inside a physical storage. And the only way you can access money inside a cold wallet is by connecting it to an online device and then putting in different keys and having to interact with it physically to unlock it. And all of these different steps and the fact that it's offline makes it much more secure than a hot wallet, which can just be hacked into if whatever trading device you're using is under attack. So my personal recommendation for this is Trezor. Definitely the most convenient and secure your cold wallet on the market right now. These are each around $100, and this tiny investment could possibly save you hundreds of thousands to millions in the future. Please get a Trezor. Now, for the purpose of this spare capital wallet, you want to think of this kind of like a checking account, right? You want it sort of accessible, but it's also at the same time a significant amount of money that you're probably not going to be touching every day. And that's why we want to keep it in a cold wallet for max security. Now, we also have another purpose for the cold wallet, and that's going to be acting as a vault. So whether you want to keep this on another Trezor or just make another wallet on the Trezor itself, this is where most of your money is going to be. So capital that does not move, right? Money that you will absolutely not be touching whatsoever unless you need to withdraw an extremely large amount of money for a trade. This is your long-term stack. The coins you're willing to just buy and forget about for a very long period of time, whether these are majors like Bitcoin, Ethereum, or like I said, if you just have a large amount of stables that you just want to store like USDC, this is your lifeline. And if you want to add other options like multi-sig for more protection, which is where you need several different private keys to log in, you can do that too. Just the most important part, and this applies to literally every single wallet that is listed over here, make sure that you have every single private key saved offline on paper. Now, that wasn't how I got drained because the hackers actually had access to my entire PC. But let's say I didn't have any wallets on my PC in the first place. But I did, however, have Google Docs with my private keys on them. Now, even if whatever wallets that I had money on weren't on this PC, that wouldn't even matter in that case. I'd be screwed anyways. So you absolutely cannot be lazy with this. It literally takes 30 seconds of just writing down a bunch of letters and numbers on a piece of paper and just keeping it somewhere safe. Please implement this. And the final split of capital that you need is fiat. Yes, real world money sitting in your bank, because no matter how bullish you are in crypto, you still need liquidity outside of it, whether that's for rent, taxes, emergencies. If all your wealth lives on chain and God forbid the worst happens or you slip up, you still want to be able to pay your bills. Do not let your real life ride completely on the internet. If you ever need urgent money on the spot, you're gonna want that to be in fiat. But the main overarching message of this entire section that'll really help you keep all this to heart is that you wouldn't walk around with your life savings in your back pocket in the streets of New York City. Don't do that online either. Now, accordingly, with segregating your capital also comes in position sizing rules, especially in a market like now where a lot of these meme coins, a lot of these utility coins don't survive past a day, and a lot more profits are being generated from higher market cap swings on established coins with more solid floors. You want to be extremely careful with how much money you're putting into newer coins. Recent newer coins like Bagwork, which ran to a $50 million market cap within the span of a couple days, is now sitting at a $3.7 million market cap, which happened in the span of, once again, a few days. Coins like Cards, which had a price of almost 40 cents, an established coin like this with majority controlled supply, hit almost an 80% retrace within the following week of that high. And I could talk about so many other different examples that are happening recently. So my point is, at the stage of crypto that we're in right now, there is a lot of profit to still be made, but it is more volatile. Once again, quite a blanket statement right there. Obviously going to be a lot more nuanced, but I can talk about that in a future video. My point here is that as a general rule, not just applying to position sizing, but for every rule in this video, you should imagine your life without whatever money you have in the market. If you lost every single dollar you have in the market, would it affect your quality of life? If the answer to that is yes, you are overexposed, my friend. And even as a crypto bull myself, I already talked about the importance of holding fiat. And one technique that's kind of meant to help with this concept is DCAing, so averaging it. Now, this is great if you already have some kind of concept of position sizing in the first place, and you can just split up whatever money you were planning to put into a coin. But for those of you who are struggling with position sizing, DCAing can be quite a dangerous concept, and it's a mistake I made a lot at the beginning. So how exactly can this hurt you? Let's use this chart of Bagwork as an example. You know, these classic giant move up and giant move down coins that we've been seeing a lot lately. Broad overview of the narrative during that entire streaming meta that we had. This coin was the leader, the highest market cap coin of the creator capital market. Now, let's say on this retrace down from 50 mil all the way down to, let's say, this 20 mil range. Classic 60 to 80% retrace range that you can use on some higher market cap coins, and you start building a position here, right here. Now, if you're already pretty good with the concept of position sizing, okay, you might put 20-30% trying to catch the falling knife here, and once it finds some stability, okay, maybe you'll put in an extra 30%, so 50% of whatever position you were planning to put in, and then it dumps even further. You see the entire streaming meta, the concept of creator capital markets, the sentiment around it just tanking to the floor. Every coin is down horrific, and you start to realize, okay, the concept of moving streaming over into the degenerate space of meme coins probably is not something with enough structure that's going to last a long time. You start to see weakness, it fails to reclaim this range, and you cut. And you may be de-risked on this huge nuke down, and then, okay, you completely exit, or de-risk even more on this little bounce here. Still losing trade, but of course, better than just dumping it all in this falling knife trying to catch it over here, and then getting caught with your pants down at the bottom. Now, let's say you're someone with rather poor position sizing. Same thing, you start to average in on this range over here, but instead you put in something like 75% of whatever planned position you had on this falling knife right here. And once it starts to show weakness, you have so much of your money in already, you're now at the point where you're thinking, okay, I have to average in now. I had way too much money at the top instead of just cutting. So you now put in more money than you ever planned to put into this position in the first place. And once again, the second falling knife over here. Now you are fucked, my friend. You are a slave to this coin. If you are ever in a position where you are just infinite dollar cost averaging into a downtrending coin like this, you are screwed. And it's something I was doing a lot at the start, especially when I made my first 6 figures. I thought I was playing with infinite money. I would do this exact same thing I just demonstrated for so many new coins that went to high market caps. And I even have personal friends who I talk to on a daily basis in person who turned a couple $100s into hundreds of thousands on generational plays like Farcoin, Trump coin, and then lose it all by oversizing like that into the market. So I'm not saying to avoid averaging it completely. Once again, I literally demonstrated how it could be an extremely useful tool for position sizing, but just keep how much you're actually averaging in and the timing of those averages in mind. Not taking your size seriously will absolutely kill you guys. But, and especially for more higher profile individuals, a lot of these $1 million losses don't really come from bad trades. They come from clicks, so malware. Operational security is going to be your #1 best friend in this space, because I'm not going to sugarcoat it, guys. Crypto is a slimy space. I trade crypto myself and I judge other people. With all this decentralization, this unregulation, comes the opportunity to bring up some of the most shady, grimy people in the entire world who can't get caught because, once again, it's decentralized. So you need to protect not only your capital, but your identity. So what are some ways you can do this? Number 1, have a dedicated device for trading only. I have 2 main devices for 2 different purposes. My MacBook, which holds no crypto, no wallets, nothing, and I only use that to take calls for business, for work, for meetings, anything of that sort. And my PC is what I actually use for trading, which I will not open a single link in any DM. I will not join a single third-party call. I will not join a single meeting. I will not join any call whatsoever on my trading device. This is my dedicated device for trading only. And if you are never putting your money in a position where something horrible could happen, then it can't happen. Number 2, use a hardware wallet, a cold wallet. I talked about this concept before. Please, it's a less than $200 investment, and at worst, you'll feel safer with your money, and at best, it could possibly save your entire net worth. Number 3, revoke permissions on old contracts. Couple buzzwords thrown out in there. All this really means is that don't interact with any coins you remember buying. Sometimes you'll see on your Phantom wallet, on your Axiom, just these random coins that pop up with no liquidity whatsoever, and it looks like you're getting quote unquote free money. But come on, I know you guys who are watching this video are smarter than that, so don't interact with those contracts whatsoever. I've heard of some stories of people selling these coins that were just given to them randomly and then getting drained completely of the wallet that they sold on it with. So just hide it, don't interact with it, completely ignore it. And finally, and this really applies to what just happened to me, is do not join third-party calls. Zoom, Google Meets, TeamSpeak. Feel free to watch my dedicated video to my $1 million drain for more details. But recently, a lot of hackers have been weaponizing the official versions of these third-party call applications to attack you. So I just wouldn't risk it at all, especially on any device that you have crypto in. And just as a takeaway, at the end of the day, trading is a war of attrition. And this applies nowhere more than the sector of crypto, where the biggest edge you can have towards identifying profitable plays is just by staying alive with enough capital so you can absorb information, absorb whatever did well in the past, and once you're more experienced, you are still alive and kicking and have the money to buy into plays that you are now able to identify as profitable. Just remember, the fastest way to make money in this market is to not lose it in the first place.